Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we have a finished three-wave corrective structure and look for continuation to the upside. In this case, the invalidation is of course moving below 49k, and an important level to take is the 70k high, and you will soon know why, because that has to do with the bearish scenario I have in my folders here. Now, what is interesting in this case is that this latest move towards the downside ended on a high amount of volume, but as per Elliott Wave International, that is actually something we do like to see at the end of a corrective structure. Now, of course, after this wave C here, we are then looking for an impulsive move towards the upside, which means that on the 4-hour and 1-hour chart, you're going to be looking for one of three structures. You want to see an impulse, 1, 2, 3, 4, 5, which is something we currently don't yet see on the chart. A diagonal structure, 1, 2, 3, 4, 5, definitely a possibility here, or a multi 1, 2, 1, 2, 1, 2 continuation to the upside in a wave 3, which at the moment doesn't look that likely because of the lower time frame counts. But on the 4-hour chart, that diagonal is definitely a scenario that we have to keep in mind. And this is the diagonal. So here, what we are then looking for is the 5-wave move towards the upside, 1, 2, 3, 4, 5, currently working on that wave 4. Invalidation is taking the low at 56.1k, but honestly, the invalidation for a contracting diagonal, which is most common, where the lines are converging to one another, is the lower end of this trend line here. So you take a channel from the high of your wave 1, or at least in this case, the end of wave 1 to the end of wave 3, to then the low of your wave 2, and you don't want price to hit the lower trend line. The moment it does, this particular scenario is invalidated, as then we have to think about expanding diagonal structures, but these are very rare. Now, what we like to see in a diagonal is overlap between wave 1 and 4. This happened because you can see over here we have overlap between 1 and 4, so that's perfect. And a common target area for your wave 4 is the 382 to the 05 area. So we were waiting for price to hit this particular area, and we have done so, touching the 382, seeing a little bit of a reaction. Now, in this box, we do still have some additional support, which is the blue box here, 60.3k to 60.9k, in case price does want to come down once more. After wave 4, we're going to be looking for a 3-wave structure to the upside in wave 5. What is common for a wave 5 is to overshoot the 1-3 trend line, also known as a throw over, and preferably that happens on a high amount of volume to fake out a potential impulsive continuation. After this 5, we then look for a deep 3-wave corrective structure and continuation towards the upside. The complete invalidation of this scenario is always going to be this low at 49k. The moment price takes out the high here at 65k, the invalidation I have here at 56.1k is going to be removed from the chart. Finally, I have the 1-to-1 here, which is also an invalidation because we don't want wave 5 to be longer than wave 3. And if you take a trend-based subextension from the low to the high of 3 to the potential low of 4 on top of that target box at around 60.5k, the 1-to-1 is at 69.4k. The second bullish scenario is also a 3-wave corrective structure, after which we look for continuation to the upside, but at the moment, this is an alternative scenario that has lower probabilities compared to the scenario shared earlier in the video. Now, what we are looking for here is a finished W, a finished X, and then a triangle structure in wave Y. Now, mind you that the common target area for wave Y is hit over here with your low of A between the 1 and the 1.236 trend-based subextension taken from the start to the end of W to the end of X. So preferably, we don't go below 49k, but in this scenario we don't, because we go sideways in an ABCDE triangle. Now, in this particular case, it is possible for price to take out this low first at 56k before eventually taking out the high at 65k. Now, this is the only scenario where you can take 56k and still be bullish, but of course the moment you do take this low, it also increases probabilities of more bearish scenarios coming up soon. Now, it is still very early to talk about triangles. Preferably, we are looking for a wave D over here, or even a wave D being finished before really considering a triangle scenario. But the reason I at least want to cover it is because of what I just mentioned, that in this case, you can take the low at 56 and still be bullish, but it is very early to call, and arguably probabilities are higher that if you do move down and take out that low, for bearish scenarios to continue to the downside and look for 49k. Now in this case, we then have a triangle A, B, C, D, E. All of the waves have to be a 3-wave zigzag family structures. And if one of the waves is a more complex structure, it is by far most commonly wave C, uncommon wave D, and rare wave B. Now what's interesting is that on the lower time frames, this move to the upside here does count best as a WXY double zigzag structure, which means a complex structure, but as just explained, that is most common in a C, uncommon in D, and rare in B. So that's actually not really something that is really supporting this particular scenario, but then again, I just wanted to show it just because of the fact you can take the low and still be bullish in a triangle scenario. It just doesn't have the highest probabilities for the bulls. The bearish scenario is a double 1-2, leading diagonal in your wave 1, a sharp corrective structure in your wave 2, touching the 886, which is rare for a wave 2, does lower the probabilities for this scenario. And then you have another wave 1, 3 wave 2, you look for continuation to the downside. Now in this case, the common target area for your second wave 2 is the blue box here on the chart. We were looking for price to take out 63k for a very long time. We eventually did now, and you want price to return and move impulsively to the downside. And that is important, and that is something you have to look for on the lower time frames, the 15-minute, the 1 hour, is this structure to the downside. If impulsive, 1, 2, 3, 4, 5, we're looking for correction and the potential of continuation to the downside, which is what you want to see in this scenario, looking for 1, 2, and eventually further downside. If this move on the lower time frame is going to be a corrective structure like a zigzag ABC or any other corrective structures, probabilities are higher to take out the high, which will reduce the probabilities for this scenario even further. Now, if price moves up to 67.6k, the probabilities for this scenario will go down even more because the 886 is rare for a wave 2. Of course, it's hit here already with the first wave 2, but hitting it with this wave 2, of course, lowers the probabilities even more because the 886 is always a rare target for a wave 2. Yes, after a leading diagonal, which is what you see in 1 here, 1, 2, 3, 4, 5. You do expect a deep retracement, most commonly the golden pocket or the 786, but the 886 is always rare for 2, and therefore it lowers the probabilities for the scenario that you see on my chart here. Now, the invalidation is 70k, and as mentioned with the bullish scenario, that is a key level. You want to take out that high. It also changes the market structure, but it also just invalidates this scenario, so we can just remove it from the chart. Now, I spoke about the importance of the lower time frame structures, corrective versus impulsive. What you see on the chart at the moment is a corrective structure to the downside. So here we then have our wave A, diagonal, a 3-wave B, and then a 5-wave structure to the downside in a wave C. It would be nice for price to move down and actually hit this support and then observe the reaction, preferably touch the support in this scenario and then move back towards the upside. This support is between 60.3 and 60.9k. The main area of resistance here, 63.7 to 64.3k. What you see on my chart is also a 0.618. This one is taken from the high of Y2 to the low of this wide wave 3. And the 0.618 would invalidate a wide wave of 4, because in this case, we are then looking for a 1, 2, 3, 4, 5 wave structure. You don't want wave 4 to move to the 0.618. So in this case, we look for one more low. Now, what does support the probabilities for one more low is that price touched the 886 here at the low, taken from the low to the first high price made, and then the retracement touched the 886. 886, again, very rare for a wave 2, common for a wave B or a wave X, increasing the probabilities that this move towards the upside is corrective in a wave C or Y, which increases the probabilities for price to sooner or later move down to take out this low one more time, which therefore would then possibly result in a scenario you see here on my chart, creating this A, B, and a 5-wave structure in a wave C. Also has to be said that so far this move to the downside is actually very, very slow. It is not as impulsive as you would really like to see when you look at an impulse 1, 2, 3, 4 and a 5-wave structure. I like to call something like this more of a staircase type of pattern. You go down and sideways and down and sideways, down, sideways, etc. Which generally is something that you do see in corrective structures like the ABC I have on my chart. Now, alternatively, your arguably more bearish scenario would be an impulse to the downside, where your scenario is actually the same, right? We just had an A, B, C, and then you move up. But in this scenario, you look for another 4 and another drop to the downside. And that is the main scenario between the two. I can put the ABC here on my chart, right? And both of these scenarios are moving the exact same, right? So you have A, B, C, 1, 2, 3. In C and in 3, you're looking for a 5-wave structure. Preferably, of course, don't hit the 0.618, right? It invalidates a wave 4, but you're looking for one more low in both of these structures, preferably then also hitting the support area we have here. But after a wave C, you want to see price move towards the upside. And more importantly, you also want price to move to the upside and touch the 0.618 that you then take from this high to wherever the low is going to be, because this then invalidates your blue wave 4, which lowers the probabilities for then an impulsive structure towards the downside. So this is something we got to keep in mind. Now in this case, in a more bearish scenario, you're looking for a 3, bigger range in 4, another move down in a wave of 5. Therefore, losing this support down here would not be too great for the bull. So if we then finally look at the probabilities of the different scenarios, and on the daily time frame, at the moment the probabilities are higher for the bulls compared to the bears, and more locally on a 50-minute time frame, the probabilities are higher to still take the local low due to that 886 touch. And we are hovering just above support. It would be great to hit that blue box. Now, bearish scenarios, of course, have to be considered, which is what we do here. An Elliott wave analyst always needs a bullish and a bearish scenario. You can't be biased to one direction. You have to analyze the chart, and based on what you see with the retracements, extensions, volumes, and more, you then have to decide on the probabilities, right? But at the moment, there's not yet a clear sign of weakness to increase probabilities for the bears. If price moves below 56k first before taking 65k again, it does increase the probabilities for bearish scenarios to take 49k. If price takes out 65k first, we at least create a potential 5-wave structure to the upside, right? At least a potential 1, 2, 3, 4, 5-wave move in, for example, the diagonal structure. That would be positive for the bulls. Taking out 70k is an important goal. Local price action is going to play an important role this week. If we get a corrective move to the downside, then the probabilities increase for price to take out 65k. If we get an impulsive move to the downside, there is the potential for further continuation. Locally, price hit another 886 on the 15-minute time frame, increasing probabilities to at least take the local low. So far, the move down is quite slow, being a bit of a staircase structure, right, as I like to call it. Not yet great acceleration for an impulse, right? Generally in an impulse, you like to see a wave 1, 2, and then a big acceleration in a 3, and then a sideways 4 and a 5, which is not yet something that we see on a lower time frame. An ABC zigzag can be counted and would be bullish. In this case, we do like price to find support on the target box between 60.9k and 60.3k. Moving lower, and we have to consider impulsive structures, which is the 5-wave move I've shown you on the 50-minute time frame. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.